I don't think the tariffs are that important by themselves. I agree with Mr. Kudlow that the economic impact is small. And I think we got a good shot, 1 in 3 or so, that they don't go into place. It's interesting. We looked at some of the stocks in particular that would be hit by this. Best Buy yesterday was down hard. Steve Madden, some of the shoemakers that are really exposed. So, Derek, I was surprised that investors took this much more severely than what you're describing, which would suggest what exactly? I mean, what does that tell you? Is it just this mindset of caution? Is it a sense that there might be worse yet to come, or are we all not understanding why this could be a bigger problem? Well, I do think there could be worse yet to come. I think there's a dividing line in Chinese retaliation that we might be getting close to. The Chinese have largely left U.S. firms who operate in China alone. Of course, they try to steal their intellectual property. They always try to do that. But there hasn't been explicit retaliation against those firms. If we were to go at some point to 25% on all Chinese goods, the Chinese have nothing material to do on U.S. trade because it's so small. They have to act against U.S. firms. That creates a lot of uncertainty for some big hitters in the NASDAQ. And I think that risk is what's weighing the market down. And I'm sure you heard what Kayla just said, but the executive she spoke with, we're starting to speculate about what those measures could look like. Revoked licenses. She mentioned even a cyber war. I mean, what do you think we should be considering? Yeah, I think the Chinese will probably, we've had no solid remarks from the Chinese about what they're going to do if these tariffs go into effect because they don't have a good low-level response. Again, their exports to the U.S. are small. If the U.S. goes big at some point to 25% on $300 billion, then the Chinese will target American firms in China in some way. And that uncertainty, if I were an executive, would be very scary. Some of them won't be targeted, but some will. It's not really clear who. They could do anything from a consumer boycott to under-the-radar cyber work. And, Kayla, then you start to understand some of the Wall Street reaction we've seen, especially for these names that would be most exposed. So how likely is it, when people say, okay, the big move would be from the 10% to 25%, what should we be looking for to see if an event like that would play out?
Well, I think time is really what people are looking at, Kelly. I mean, the folks that I've had conversations with today are really looking at the next 6 months as a make or break moment for these talks. There's an expectation that the president is more inclined toward a deal than against a deal, but he sees the next few months as really the last chance for him to really ramp up this leverage before going into the heavy campaign season in 2020, where he doesn't want to risk hurting the economy. He doesn't want to risk giving his rivals a leg up. And so if there is, in fact, a window of opportunity that the president has over the next few months to really hold China's feet to the fire, then people say, worst case scenario, you could see this ramp up in relatively short term.